Sorry, friends. Today, because of heavily age and because of some little bit drowsiness, so that uh, afternoon I'm not able to perform well. Now I would like to come and discuss a lot about auditing. My friend would like to go. Would like to. We are talking about SEA 710, that is called comparative information. The comparative information is the corresponding figures and comparative financial statements. A scope, the SEA 710 addresses the auditor's responsibilities regarding comparative information in an audit of the financial statements. If prior period financial statements were audited by a predecessor auditor and were not audited, the requirement of SCA 510 also apply. The nature of the comparative information. The nature of the comparative information depends upon the applicable financial reporting framework. There are two approaches auditors reporting responsibilities on comparative information, corresponding figures, and comparative financial statements. The approach is often specified by law, regulation, or terms of engagement. Essential audit reporting differences, corresponding figures, auditor's opinion refer to the current period only. Refer to the current period only. Current period only. See the nature. Okay, it's okay, it's okay, it's okay, it's okay, it's okay, my friends. Friends, we need to understand nature of the comparative information. The nature of comparative information depends on the applicable financial reporting framework. There are two approaches to auditor reporting responsibilities, and comparative information, corresponding figures, and comparative financial statements. The approach is often specified by law, regulation, or terms of engagement. Essential audit reporting differences. Corresponding figures, auditor's opinion refers to the current period only. Comparative financial statements, auditor's opinion refers to each period presented in financial statements. Objective: obtain sufficient appropriate audit evidence that comparative information is presented in accordance with the applicable financial reporting framework. Report in line with the auditor's reporting responsibilities. Auditor's responsibilities. Audited procedures. Oh. Nature of comparative information. The nature of comparative information depends on the applicable financial reporting framework. There are two approaches to auditors reporting responsibilities on comparative information: corresponding figures and comparative financial statements. The approach is often specified by law, regulation, or terms of engagement. Essential audit reporting differences. Corresponding figures, auditor's opinion refers to the current period only. Comparative financial statements, auditor's opinion refer to each period presented in financial statements. Objective: obtain sufficient appropriate audit evidence that comparative information is presented in accordance with the applicable financial reporting framework. Report in line with the auditor's reporting responsibilities. Meaning of cooperative information. Amounts and disclosures of one or more prior period included in the financial statements as per the financial reporting framework. Audit procedures for comparative information. Auditors shall verify whether the financial statements include the required comparative information and whether it is appropriately classified, and comparative comparative information agrees to prior period amount. Prior period amounts and disclosures. Verify consistency of accounting policies or ensure changes are properly accounted for, and disclosed. If a material misstatement in comparative information is identified, perform additional audit procedures to obtain sufficient audit evidence to determine material misstatements current period financial statement. If prior period financial statements were audited by the same auditor, follow standards on auditing SA 560 for relevant requirement. As per SA 580, obtain written representation for all materials referred to in the auditor's opinion. Also, obtain a specific representation regarding any prior period item disclosure in the current year statement of profit or loss account. Audit reporting regarding corresponding figures, comparative information where prior period amounts and disclosures are presented as part of the current period financial statements. These figures are intended to be read only in relation to the current period figures, and the level of detail is dictated by their relevance to the current period figures. See, the auditor opinion on corresponding figures shall not refer corresponding figures except in the following cases: unresolved prior period modifications. If the prior period report included a qualified disclaimer or adverse opinion and the matter remains unresolved, modify the current period opinion in BFMO para. Material in current period refer to the both the current period figure and the corresponding figures. And the basis for modification paragraph, if the unresolved matter materiality affects current figures, not material in current period, explain the current period opinion modified due to unresolved matters affected on the comparability of the current and prior period figures, even if no material impact on current figures. See, material misstatement in prior period, if material misstatement exists in prior period financial statements on which unmodified opinion is issued, corrected in current period, verify if the misstatement was corrected under the financial reporting framework. If not corrected, express a qualified or adverse opinion on the current period financial statements. Prior period financial statements not audited. If prior period financial statements were not audited, state the same in other matter paragraph that the corresponding figures are unaudited. This statement does not reduce the responsibility to obtain sufficient audit evidence to ensure opening balances as per SCA 510. Prior period audited by predecessor auditor. If prior period financial statements were audited by a predecessor auditor and the auditor refers to the predecessor report, includes on the matter and the other matter paragraph stating the financial statements were audited by predecessor auditor. Mention the type of opinion expressed and the reasons for any modification. State the date of the predecessor auditor's report. Understand? Yes, you understand. See, audit reporting for comprehensive financial statements. Definition of the comparative financial statement. A comparative financial statement include prior period amount and disclosure for the comparison with the current period. If audited, the prior period information is referred to in the auditor's opinion, the level of information is comparable to that of the current period financial statements. Auditor's opinion. Auditor's opinion must refer to each period for which financial statements are presented and on which an audit opinion is expressed. Difference of opinion with prior report issued by the same auditor. If the auditor's opinion on prior period financial statements differ from the previously expressed opinion, disclose the substantive reason in the other matter paragraph as per SA 706. Okay, let's start next page. Prior period financial statements audited by a predecessor auditor. If prior period financial statements were audited by a predecessor auditor, include other matter paragraph stating that the prior period was audited by the predecessor auditor. The type of opinion expressed and reasons for any modification. The date of the predecessor auditor's report, unless it is revised. If material misstatement exists in prior period financial statements on which the predecessor auditor expressed unmodified opinion, communicate with management and those charged with governance and notify the predecessor auditor. If prior period statements are amended and the predecessor auditor issues a new report, the current auditor's report only on the current period. Prior period financial statements not audited if the prior period was not audited, include on the other matter paragraph stating that the comparative financial statements are unaudited. Such a statement does not reduce auditor responsibility for obtaining sufficient appropriate evidence and opening balance of the SCF 510. Friend, let's go. SCF 720, standards on auditing 720, auditor's responsibility related to other information. Content. Objective of SCF 720, if The auditor objectives are to check if there is a material inconsistency between other information and the financial statements, to check if there is a material inconsistency between other information and auditor's knowledge from the audit, to respond appropriately if material inconsistency or misstatement are found, to report as per standards on auditing. SA, this SA. Responsibilities apply before or after the audit report. The auditor does not provide assurance or other information. This standards on auditing does not apply to preliminary announcements or prospectus. Definition: other information, financial or non-financial information other than financial statement and auditor's report included in entity annual report, other matter paragraph is a difference is for annual report. Annual report is a set of documents prepared annually by management or those charged with governance as required by law, regulation, or custom. It aims to provide owners or stakeholders with information on operations of the entity, financial results and positions as presented in the financial statements, development, future outlook, risk and uncertainties, governance matters, including a statement from the governing body. The annual report includes or accompanies the financial statement and the auditor's report. Now, misstatement of misstatement of other information, incorrect or misleading information, including omission of key details. Audit procedures for other information. Obtain other information. The auditor must obtain other information, discuss with the management which documents make up the annual report and their timing of issue. Arrange to obtain the final version of the documents before the auditor's report date is possible. If some of the documents are available after the audit report date, a request to written representation from management to provide from to provide them to auditor when available before making them available to third parties. Read the other information. The auditor shall read other information and check for material misstatement, material inconsistency with the financial statements, material inconsistency with the auditor's knowledge from the audit, indication that the other information is materially misstated. Responding to material inconsistencies, if the auditor finds material inconsistency, then the auditor shall discuss with management and determine if misstatement exists in other information. Determine If the financial statements are misstated, decide if the auditor's understanding of the entity needs updating. If material misstatement exists in other information, request correction from management. If management agrees to correct, confirm the correction. If management refuses, communicate with those charged with governance to request correction. If material misstatement identified before the report date, if not corrected, consider the impact on the auditor's report. Consider withdrawing from the engagement if needed. If material misstatement identified after the reporting date. If corrected, if corrected, perform necessary procedures. If not corrected, take appropriate action to inform the users about the uncorrected misstatement similar to standards on auditing SU 560. If material misstatement exists in financial statements, if the auditor identifies a material misstatement in the financial statement, they should respond appropriately. Auditor's reporting requirement: the auditor must include a separate section titled Other Information. This section should include a statement that management is responsible for the other information, an identification of other information obtained before the auditor's report date. For listed entities, other information to be obtained after the reporting date. Audit report: a statement that auditor's report does not cover the other information and no discussion is given. Okay. A description of the auditor responsibilities in relation to reading, considering, and reporting other information. If other information obtained before the reporting date, a statement that the auditor has nothing to report, or if interest an uncorrected misstatement, describe the misstatement. Reporting prescribed under law or regulation. If law or regulation requires the auditor to refer to other information in the auditor report using specific layout or wrong or wording, the report shall mention standards on auditing only if it includes identification of the other information obtained before the auditor report, date, description of the auditor's responsibilities regarding this information, explicit statement on the outcome of the auditor's work related to this information. summary reporting, material misstatement in other information, unmodified opinion, and report in other information, para about such material misstatement in other information. Material misstatement in financial statements, modified opinion, and reasons in basis for material modified opinion, para in the report. Okay, now I would like to go SA 299. We are going to stop in SA 299. What is SA 299? SA 299 speaks about joint audit. It's talk about joint audit. SA 299 is a joint audit of the financial statements. What is joint audit? Like, a joint audit refers to the appointing two or more individual firms for auditing financial statements in accordance with SA 299. It's called a joint audit financial statements. Now, popular in audit large entities statement due to requirement of law. Section 139 subsection 3 of the members may resolve to the audit will be conducted by more than one auditor. Sorry, my friends who are watching my YouTube channel. Maybe my call because of call, maybe disturbance to you. But kindly pardon me. I'm going to study other things. You will be enjoy our discussion. Dear friends, I would like to tell you that what is a joint audit? What is the requirement of joint audit? How to do, what to do, when to do. We'll see now. Yes, come to the point. The responsibilities of the joint auditor is individual or separate responsibilities when work is divided among joint auditors. Each auditor is responsible only for their allocated works, which may base on items, assets or liabilities, income or expenditure, geographical areas, identified units, period of financial statements, joint responsibilities. Individual responsibilities in the following circumstances. Audit work not divided among the auditors and performed collectively. Decisions taken collectively regarding common areas. Matters brought to all joint auditors' attention by one auditor and agreed upon by all, ensuring the financial statements that comply with the statutory requirement, verifying presentation and disclosure of the requirement as per the applicable financial reporting framework, ensuring that ensuring that the audit report complies with relevant standards and statutes. In determining nature of time and extent of audit procedures, each joint auditor is responsible for the assigned area. They must individually assess the internal control system and risk related to the work. For common audit areas, like a joint auditors, collectively decide, collectively decide in determining nature, timing, and extent of the audit procedure. Each joint auditor is responsible for determining the nature, timing, and extent of audit procedure for their assigned areas. They must individually assess the internal control system and risk related to their work. For common audit areas, joint auditors collectively decide on the audit procedures, ensuring their appropriateness. However, executing these procedures correctly remains the individual responsibility of the respective joint auditors. Audit reporting in case of joint audit, common report. Generally, joint auditors issue a single audit report with a common conclusion and a common opinion. Disagreement with disagreement among joint auditors. A joint auditor is not bound by the majority opinion. If there is a difference of opinion, the disagreeing the auditor can issue a separate report. In such a case, each joint auditor's report should refer to the other joint auditor's report, communicating to those charged with governance. If joint auditor plan to modify the opinion in the auditor report, they must inform to those charged with governance about the reasons and proposed wording to comply with the SA 705. What is meant by SA 705? Let's go back. SA 705 speaks about modification to the opinion in the financial reporting framework. The modification to the opinion in the auditor's report, that would like to be SA 705. SA 705 speaks about auditor's opinion, audit report opinion, which expressed based on the financial statements and available records. Okay. Okay, friends. See, friends, what I would like to speak. Let me talk. Friends, this is People's Advocate Sriman Narayana Malala. Objective of the People's Advocate Sriman Narayana Malala is assist legal assistance to poor and marginalized people who cannot affordable courts, authorities to stand and talk and express for the knowledge. On behalf of that marginalized people, this people's advocate is ready to spend time and arguing the case before the courts. Today I came forward to share my knowledge in advanced auditing and professional ethics. We'll discuss a lot. We'll talk a lot. Understanding, assimilating, inculcating, and then we can write answer. We'll play. Friend, audit reporting in case of joint audit, one of the elements that's called communication. The communication to those charged with governance is an important element you need to do. Why? You need to communicate. You need to communicate. The standard itself is telling you communicate. Similarly, about the reasons and proposed wording to comply with the standards on auditing SS 105. Similarly, if there is intended to include an emphasis matter paragraph, other matter paragraph, they must communicate. They must communicate this along with the wording to ensure compliance with standards on auditing SA 706. Coordination among joint auditors. Coordination. Proper coordination is essential if any matter is defined, if any matter is identified that affects the work of other joint auditor. It must be communicated to them before the auditor's report. Entitlement to rely on other joint auditor work. Assume that other joint auditors have completed their assigned audit work as per the standards on auditing. They do not need they do not need to review or test the framework done by the other joint auditor. Assume that other joint auditor will inform them of any departure from financial reporting standards or any significant observations notified during the audit. If any one joint auditor audit the financial statements, a division of branch, the other joint auditor can assume that these statements comply with the legal and regulatory requirements and present a true and fair view of the divisions or branch financial statements and operations. Special consideration under SA 299. Engagement partner role The engagement partner and key engagement team from each joint auditor should be involved in audit planning. Okay, now, my dear friend, who watching this YouTube channel, YouTube watch viewer, what I could say, the overall audit strategy. A joint auditor must jointly establish the overall audit strategy as required as a 300. That's called audit planning. Joint audit plan. A joint audit plan must be developed before stating the auditor addressing division of areas and in identification of common areas. Reporting objectives of the engagement team, communication of significant factors among joint auditor to guide the engagement team, results of preliminary engagement activities, assessment of resources required for the engagement, risk assessment. See, joint audit plan. A joint audit plan must be developed before stating the audit addressing division of areas and identification of common area, reporting objectives of the engagement. What? Reduce. See, division of areas and identification of the common area, reporting objective of the engagement team, communication of the significant factors among the joint auditor to guide the engagement team, result of the preliminary engagement activities, assessment of resources required for the engagement, risk assessment. Each joint auditor must assess the risk of material misstatement and communicate to the others. Audit procedures. Joint auditor should discuss and document nature, timing, and extent of procedures for common areas and specific areas. Engagement and management letters. Joint auditors must yes obtain a common engagement letter and a common management representation letter regarding the management responsibilities. Okay. Understand? See, basically, risk assessment, each joint auditor must assess the risk material misstatement and communicate to the others. Audit procedure, joint auditors should discuss, document the nature, timing, and extent of the procedure for common areas and specific areas. Engagement letter, engagement letter. Joint auditor must obtain common engagement letter and a common management representation letter. Thing is, work allocation, engagement management letters. Joint auditor must obtain common engagement letter, and a common management. Work allocation, work allocation among the joint auditor must be documented and signed by all and communicated to those charged with governance. Okay, now next thing we would like to go for SCFI 70 going concern. I would like to talk about going concern now because we need take 5 minutes break. I would stop this video and coming another video as planning for talk about SCF 570 going concern. It's very very important standards on auditing SCF 570. Just 5 minutes break. Let's together connect our discussion. Thank you. Thank you, and all my friends.